In this video, I'm going to be breaking down Ethereum, the second largest cryptocurrency right now. I'm going to be sharing with you multiple patterns that I see on the chart right now, break those down for you, share where I think Ethereum could be headed in this next bull run, and tell you where I'm going to be buying. If you like this type of content, make sure that you hit the like button and of course subscribe for more content like this. Let's jump in. So we have Ethereum on the weekly time frame looking at a logarithmic scale. If you see my other videos, you know that I like looking on a log scale just because it helps me to see the patterns and the price movement of these big, massive crypto moves. So on the chart, I see multiple patterns forming, but the first one that I want to break down for you is just a typical Elliott wave pattern. And so actually getting my head ahead of myself here, but we've got the 5-wave impulse structure followed by a 3-wave corrective structure in Elliott wave. So if you watch my videos, you know that I like using Elliott wave to analyze different charts. To me, it just helps me see what's going on with the price action and make better investment decisions. That's just my preference and what works for my brain. And price does not go up in one direction all the time. It moves in waves, and Elliott wave theory takes this into account. So for a typical 5-wave Elliott wave structure, we have price going up for wave 1, followed by a pullback in wave 2, up for wave 3, back down for wave 4, up for wave 5. That 5-wave structure then completes a 1-wave in what's called a higher degree. So there's 5 waves inside of this wave 1. And so once you have 5 waves put together, that creates a larger wave. Then that's followed by a 3-wave corrective structure, which is in most cases a pullback of whatever trend price is going. And that's an A, B, C pattern. And that creates a wave 2. So this large one right here that we're looking at, this 1 through 5, and then A, B, and C. This is all represented in waves 1 and 2. So it kind of builds off of each other, and there's waves inside of each wave, and then each wave, each 5-wave structure or ABC structure creates another larger wave. So let me show you that as to what I see on the chart. And let's pull up the Elliott wave count. So this is going all the way back to 2015. On this chart, I see wave 1, 2, 3, 4, and then an extended wave 5. That was the first cycle that Ethereum was around for. So topping out at the end of 2017, beginning of 2018. And as I mentioned, that creates a larger wave 1. So those 5 waves create a larger wave 1. And so let me show you where I see continue on with that. So we have wave 1 that's created here. Then we came back down for wave 2, and wave 2 was comprised of an ABC pattern, which I'll put that on the chart here in a second. But then we go up for wave 3, which was the last cycle top in 2021. Then we came down for wave 4, and now we are in wave 5. So inside of wave 2, we had an ABC, and let me zoom in a little bit more. And so I would have considered that to be right here. So A, B, and then C. So it doesn't always look exactly like this, this proportion and what these look like, but you have to be able to see and count and see what waves actually are what they call subdivided in each one of these. And so, and this is somewhat subjective, but when some of the charts are very clear, and they're very clear to make some of these counts, and I consider the Ethereum one to be one just like that. Then actually I would put this wave 4 over here, and I would label this as A right there, then B, and then C. And so that definitely has a different look. And so I want to show you this other pattern. So one of the ways that an ABC pattern can correct is in a running flat. And so with the running flat, A comes down just like normal, B goes up, and then C comes down again, but it doesn't go all the way to where A was, wave A. And that's what we have on Ethereum, in my opinion, when we came down for this low in October of 2023. We obviously had the big sell-off June of 2022. This is all still in the bear market. Then B was 3 waves to make a high right here in April of 2023. And then this would be wave C. Now that has started, that ended wave 4, and now we are in wave 1 of wave 5. Wave 1 and 2 of wave 5. So let me put that on the chart as well. So then I have wave 1 here, wave 2, and then, so correction, we're in wave 3 of the larger wave 5. So I know that's a little bit to follow, but again, I liked using Elliott wave because it really does show up on the charts, and it is a little bit subjective. You might be able to look at the chart and have a different count, and both could be right. Both could be right. It only just takes time for the market to move in certain directions. But anytime that I can analyze a chart with Elliott wave, it just gives me more confidence and increases the probability of price going a certain way. And that's basically what trading and investing is. It's finding out what the probabilities are and mitigating your risk towards that, and finding opportunities to buy in when there's way more upside than there is risk. So with that being said, wave 1 and wave 2 complete of this larger wave. That means we're in wave 3. And there's one chart pattern, or there's one candlestick pattern that I see that gives me even more confidence that we're about to head to the upside. And that is this bullish engulfing candle, this big green candle right here. And not every time that you see this on the chart, it means we're going to the upside. But with a bullish engulfing candle, what you have is this green candle, totally the body of the green candle, meaning the shaded area, that totally engulfs the previous red candle. And in this case, it engulfs a lot of candles. And so that just means that buyers are stepping in, looking to move price higher. And if you look at different points where you have a bullish engulfing candle, it does seem to lead to price going higher. Now, again, it doesn't mean that every time one prints on the chart that it's going to go higher, but when you have it near an area of support, which we do here at the 200 moving average, we have it at the end of a wave 2, and we have multiple candles, in this case, being engulfed by this green one, then it increases the probability. It's not a hard and fast rule. It just increases the probability that we're going to go to the upside. So that is another bullish sign in my opinion. Now, where could we go potentially with this wave 3? I want to show you this when it comes to Elliott wave. So one of the ways that we can predict the price levels of Elliott wave is by looking at a chart like this. Now, there's different levels that Elliott wave can go to, but this is kind of what to look for in a very textbook example. And so we have wave 1, and everything gets measured off of wave 1, and we come back for wave 2. Oftentimes that comes back to the 0.618 Fibonacci level. There's other Fibonacci levels, but if you see price come down to the 618 level, that could be a good indication that price is ready for a pullback. So let's actually go back and measure this one. And I believe this one's going to be way shorter than that. Yes, way shorter. So it doesn't always work that way, but in a lot of cases, wave 2 does come back to the 618. This one that we're in right now might actually be at the 618 level. And yes, pretty close to that. Price coming down to that 618 level. Obviously, we have a couple wicks there, but then starting to turn around. And then when it comes to the extension, what we would do for wave 3 is, to use an extension. So we would measure wave 1 and then use the Fibonacci extension tool and look for price to go to potentially the 1.618 level. So that means it's 1.618 times the length of wave 1. So if we were to do that on Ethereum here, in this price, in this wave, we would use the Fibonacci trend-based Fibonacci extension. We would measure wave 1 from the bottom to the top, and then bring that to right around the start of wave 3. And then we would measure for potentially up to the 1.618 level. So that's right now at 12,000, almost 12,000 even. So I think at very minimum, we should hit there. And one of the rules of Elliott wave is that wave 3 cannot be the shortest wave. If you look at this wave count, even though you can't really tell too much, but this third wave is longer than wave 1 and wave 5. So it cannot be the shortest wave. That's just one of the rules of Elliott wave. So most of the time when I'm looking at a chart, I will at least look for wave 3 to be whatever the one level is for the Fibonacci extension. So basically by measuring wave 1 and then putting it at the start of wave 3, this one level would mean that wave 3 is exactly the same length as wave 1. And so it obviously, that would be the minimum that it could be, or at least it can't be the shortest wave. Technically, it could be shorter than wave 1, but then wave 5 would have to be even shorter than wave 3 for the rule to play out. So let's continue on with another pattern that I'm seeing on the chart, and that is the cup and handle pattern. And I've been talking about this pattern a lot on the channel just because I see multiple cryptos with this pattern playing out right now. So to kind of break down this textbook example, we have price coming up, meeting a level of resistance, then making a pullback and making a series of lower lows and lower highs, but then around this middle part, turning around and making a big U-turn right back to that level of resistance. When it does that, it has a short pullback, and then price would explode to the upside. We'd have a breakout there. So let's take a look at Ethereum right now. And again, the textbook examples are textbook examples. When you're looking at it on the chart, it may not look exactly like that because the markets aren't that perfect. We're dealing with human beings and a lot of price movement and a lot of factors. But when you're able to identify some of these patterns, then you're able to recognize when they do show up on a real chart. And so what I see is this nice price coming into this resistance level. Technically, we have some resistance here, but then also right here. And I kind of see this rounding pattern that creates the bottom of the cup and handle. So this would be the cup part, this rounding, the series of lower lows and lower highs, but then making a U-turn back up to this level of resistance. That creates that bowl or that cup. Then once we came back to that resistance level, we had a little bit of a pullback here, which again, we see right over here. In this case, it's a little bit more shallow, but on our real chart, it's a little bit deeper, which is totally fine. It came right back to the support level. But then in the pattern, we should be looking for price to continue and go to the upside. Just like we see right here, it should break past this level of resistance and continue to go to the upside. So now, how do we measure where price could be headed? This pattern gives us a way that we can set a price target, and that's by measuring from the bottom of the cup and handle, the cup of the cup and handle part, up to that level of resistance. I also like to call that the lid. So let me actually clean this up a little bit so we can see a little bit better. So if I were to draw a trend line, I'm just going to use this lower pivot point over here as our level of resistance. And then if we were to measure using the price range measurer tool, and I won't even go all the way down to the bottom, but I'll find this area right here. So if I'll measure here all the way up to the top and then set that on top of this resistance level, again, not even setting it on the pivot point, but just the resistance level to have a little bit more of a conservative price target, then we're talking about at least 10,000 right now as a price target based upon this pattern right here. If this pattern plays out, then this would be the price target for it. And we've just measured it right over here. So even if I were to set it on top of this pivot point, it brings us to right around that 12,000 mark, which was the price target we had set even before of that wave 3. So multiple things working together to suggest that price would be moving up and forward. So I'm extremely bullish right now on Ethereum because I think we're in an interesting place where we have price bouncing off of support. We got the bullish engulfing candle. This looks like a wave 2. It also looks like the handle part of the cup and handle part as well. So there's lots of things that are combining, in my opinion, to make this a bullish case. So I actually have been buying some Ethereum, especially right after this bullish engulfing candle. I will continue to dollar cost average, meaning buying some a little bit on regular intervals as price continues to go up past this resistance level. Once I see price break out past the resistance level, then I'll probably just keep in what I have in, and I won't necessarily look to sell until probably around $10,000. That's kind of my strategy. Of course, for all of these videos, this is just for entertainment purposes. This is not my analysis. This is not me. This is not me telling you what to do. You've got to do your own diligence and find out where your conviction lies and what investment decisions you can make. But that's what I'll be doing. I'll be continuing to add in until price breaks above this. If it does retest, which it very well can, then maybe if I see a bullish pattern, then I'll buy back in a little bit more. But other than that, I'm looking to buy and hold until we get to at least 10,000. I think we could go even higher than that. But for right now, that's what I'm looking for. Let me know in the comment section what you think about this analysis, these 3 patterns, the cup and handle pattern, the Elliott wave, and the price target of $10,000. If you like this content, if you found something new, if you learned something new, hit the thumbs up button and subscribe for more. Make sure that you watch this video right here because this could also help you in your crypto investing journey. Thanks so much for watching. I'll see you in the next video.